Lance Lambert with Resi Club, he says that on the same 400,000 loan example, a 30-year borrower would pay roughly $483,000 in interest in the time it's paid off. So you get a $400,000 loan. Yes, you pay off the $400,000 principal loan, but you end up paying a $483,000 of interest. So you're paying really $883,000 for the home. Everybody kind of knows that when you've already bought a home with a 30-year fix or you're getting pre-qualified. You get the gist and you understand that that's the case. You end up paying double than what you paid for the home. But when you look at a 50-year, it's closer, according to Lance, to $980,000 now that you're paying in interest versus $483,000. So roughly a $500,000 more in financing costs when you go from a 30 to a 50 year. How the 30-year mortgage is going to be lower interest rate than a 50-year, of course, because now the investors have to lock in a price or an interest rate for a longer term. So of course they're going to charge a higher interest rate. When you get a 15-year mortgage, it's cheaper. And when you go to the 30-year, you're paying about 0.5% or a little bit more to have that 30-year because you're locking in that fixed rate for a longer period of time. And investors need a way to find some risk management. So that's why they charge you a little bit more. So here's a graph that basically just shows that, gives you that spread to see that's consistently about 57 basis points. Logan Motashami, who is part of Housing Wire, tells Resi Club that he estimates a 50-year mortgage would carry an interest rate roughly 42 to 57 basis points higher than the standard 30-year mortgage. So yes, your 50-year mortgage will be less expensive per month and you'll be able to qualify for the home rather than if you went with the 30-year. And again, your payment's going to be lower because the 50-year is spread out so much longer. However, you are going to have a higher interest rate by 42 to 57 basis points. Problem though is that long term, you're paying interest on most of that time frame only. You're not paying down the principal. So you're going to be paying so much more than if you went with the 30-year. And that's the problem if you stick around to pay off the home for 50 years. Affordability is a thing, but you are going to be paying a hell of a lot of interest. So is it really beneficial? It's hard to give that answer because in a way it is, in a way it isn't.